Okay, so I'm sitting today with Sasha Lockley from Money Sweet Spot. I won't go and explain it myself because I'll probably make a mess of it. But what I do want to point out is, people say that money doesn't bring happiness, but if money's not going well for you, it can certainly bring a lot of pain. And that's a good segue. And so Sasha can talk about Money Sweet Spot. But first of all, Sasha, thank you again for taking the time to sit with me and talk about your project today.
That's all right. You're welcome.
Yeah. So can you tell me what is Money Sweet Spot?
Money Sweet Spot is a social lender focused on providing financial resets to Kiwis so that people can move through rather than be defined by debt. So we focus on helping people get out of high cost or predatory lending, consolidate and bundle that debt up, basically, so people can get on with their lives.
Beautiful. That's a nice little elevator pitch there that you've so refined. And where did the inspiration come from for this project?
Where did it come from? There's a long meandering journey of an answer to that question, but essentially my own family background and what I was seeing in New Zealand kind of all married up one day. And I call it my matrix moment when I was driving over the Harbour Bridge, when I realised that the kind of stories of the customers that I was working with at the time, because I was the COO of one of the biggest finance companies in New Zealand, and people were kind of facing really tricky life events that was impacting their ability to repay their debts. And I really couldn't understand why I used to get so upset about it because, on the face of it, I'm a middle class white woman from privilege. But in that moment, I realised that that might be the case on the veneer, but my background is none of that. And when people were facing kind of addiction problems or deaths of family members or businesses going bankrupt and all of those things that are actually pretty unpredictable, they'd all happened in my life and in my family's life. And that's why I was getting so upset, because I know that my family are good people and I'm a good person, and a bad thing was happening. And ultimately then people were being abandoned and ending up in this horrible situation of heaps and heaps of default fees and interest. And that's not fair. And people are never going to be able to, I'm just watching my sweet spot earring is like tapping on my microphone. They're never going to be able to get out of it. And I just knew that there had to be a better way. So I'd done some cool work in my old employer, but I knew that my appetite to try and be helpful to people was way higher than the current system. So left that to try and figure out how we could help everyday New Zealanders to move through debt rather than it feeling helpless, I guess, and out of their control.
I can see on your website some pretty heavy-hitting partners that you've got behind this project. It's obviously, as we were talking about offline, working in financial services myself, I see the problem that you've identified, and we'll look on helplessly going, oh, that's really sad. But you've actually moved to that next phase of taking action, but you've also got other people on board with you.
Yeah, we have. And to be honest, that took a bit of time, because if you imagine kind of trying to raise capital or funding and you say, oh, actually, I don't want us to be the biggest finance company. No. And we're not going to make shed loads of money. And we'll be really happy if we lose customers, because then people will have done their financial reset. I mean, imagine, they'll be like, what? So we're really lucky that we found really mission aligned investors. So we did complete our pre-seed round last year. And through BNZ, we're under the financial sustainability kind of impact strategy. So that's where we get our money to borrow, to lend to our customers from as well. So it meant it took a while, and it meant being really clear about how we wanted to run this business. Because me and my co-founder, we say, it would be a lot easier to set up a normal finance company. We know how to do that. We could probably make a shed load of money, but we're deliberately choosing not to. So it takes a bit longer for people to find your people and your ecosystem that understand your mission.
And so who have you designed this to help?
We've designed this to help, actually, in the current economic climate, it is nearly every New Zealander, right? Because our interest rates are between 10 and 21%. And that is to cover our costs. So we don't have a profit motive, but we do have a financial sustainability motive. We want to be here for as long as New Zealanders need us. So we've got homeowners that want to be able to keep their homes, but they do have some consumer debt that that if they're able to bundle up, they're able to keep their homes because their mortgage payments might have gone up. At the other end, we've got people that may have been on benefits for a wee while and have racked up a bit of debt there. But then there's a lady that's got her first job after having a baby and being a single mom, and she just wanted to tidy everything up because she wants this new chapter to coincide with her new job. Like, how cool is that? You know. And then there's the whole bit in the middle. You know, everyday New Zealanders that are working, probably renting, couple of kids, juggling, and, you know, kind of sick of the juggle and may have dropped a few balls. So, you know, humans, actually, it's set up for humans, and that life's happened. Like, you know, it really is that simple.
And I noticed losing a customer is actually something that stokes your fire.
Well, yeah, because if we lose customers, they've completed their financial reset and they're off, you know, doing life. And what I guess the point there is that we're not just a finance company. So kind of by doing the financial reset, we also link your individual commitment to a financial reset to a community outcome. So if you're paying on time and avoiding new debt, then that links to a community outcome and a donation that you can choose. So we don't tell you, we don't say Money Sweet Spot's going to donate. We give you the option of where you want to donate that money. And then by also engaging in the financial education and support that we've got, you engaging in that creates a point that is worth $2. And then that $2 can come off your loan balance, or it can go into your savings account. So building that kind of get yourself out of debt even quicker, or have that kind of emergency fund that we know that it's tricky to have in your back pocket for, you know, when the unexpected happens. So there's a few bits and bobs in there. So when we lose a customer, they're going to have a lot more things in their kitty to be able to get on with life.
Yeah. So it's a reset in the clearing of the debt, but it's also an investment in themselves worth, you know, once they come through your program, they're going to be able to make smarter choices and they're going to be better equipped to get on with it.
Yeah, exactly. Yeah, exactly.
So what do you think is behind some people's poor financial situations?
Yeah, that's a massive question. So I think, I mean, everybody always goes to the financial literacy piece, and that's true in part. But I think that what we need to acknowledge, and what doesn't get talked about often enough, is that we all have different definitions of money, wealth, whānau, and how that operates. And what I mean by that is that when people, so we have customers that are Pacific, Māori, Pākehā, new immigrants, and all of those people have a different language around money and wealth. So I think that to kind of do the financial literacy is the big problem and we need to invest in it. I think that that's not quite the right answer. I think that it's actually, we need to acknowledge that families operate in different ways, and to pretend that give training that says, oh, well, you should all be saving for retirement. Well, actually, is that actually how all families operate? Actually, in some cultures, you don't save for your retirement because the younger generation look after older generations. So actually, I think some of what drives it is that there's a lack of acknowledgement of how different families operate, and an assumption that everybody needs to be trained the same way, which I don't think is right. The second thing is that you know, the cost of living here is tricky for many, many, many families at the moment. So it doesn't take much for an unexpected cost to tip people over the edge. So that is a driver behind that. So we don't have a level of maybe you could call it financial resilience, but I don't know about you, but I don't have that emergency fund either. And I'm meant to be somebody that knows about this stuff. Like it's just not how we've managed to be able to operate, particularly as a startup founder, to be honest, as well. You know, and so that's kind of unpredictable life events, definitions of money and wealth, a lack of kind of emergency savings. They are the three main things. I think kind of our regulatory and our legislative environment is kind of intended to help people. But what I also see is that sometimes that keeps people in high cost debt. And I think that's also really unfortunate, even if people want to try and get out of it. So trying to navigate the many pathways of what you could do. And like we talked about offline, being we don't talk about money and debt like freely, like we talk about cups of tea or the weather. So kind of sitting there and not knowing how to reach out. And then by the time you do it being too late. I think that also manifests in, you know, high levels of consumer debt, problem debt, arrears, defaults, too much juggling that becomes struggling. That means that then people are too far down that kind of continuum of being closer to an insolvency type procedure rather than juggling. Yeah.
Mm-hmm. Yeah, and I suppose to build on what you were just saying about the regulatory environment, we with the best of intentions, it's there to protect people, but once they're in that situation, it's actually stopping others from helping, and that's when you start loading up with those short-term products on top of the debts that you have to try and keep afloat. And then you've got the cyclical nature of that. Once you're in there, you kind of then start to depend on that, and then and it's just a life event will happen, and then you might get a default, and then it's just this sometimes,
and it becomes a spiral then, doesn't it? And I mean, and I think I don't, if you think about payday lenders or buy now pay later, I do not hate innovation in financial services, right? And I think that the user experience of some of those providers is good, but with buy now pay later, they're great if you can buy now and pay later. And I think as long as the facility is something that you're in control of rather than the facility being in control of you, then that's a cool thing. But how do we help people to understand how to use those facilities so that they're a helpful addition rather than being something that becomes kind of like you said, kind of part of a spiral, kind of adding on those payday lending and adding on multiple buy now pay laters. And we do see that in our loan applications. Most people have multiple buy now pay later balances. There are particular high cost lenders that turn up all the time on nearly every application that we've got. And to be honest, and I haven't said this anywhere else, and to be honest, there are maybe 4 or 5 lenders that appear most of the time. So it's tricky, isn't it?
It is. It is. Well, I'm looking at my other questions that I had, and I think some of them we've covered pretty well. Some of them are the symptoms that we experience when we're going through financial distress.
And I think so. Maybe what I would like to say is that there are some things that I assume people know about lending and debt that they don't know. About how decisions are made.
I'm so sorry.
You're right. So, for example, one of the things that we do through being involved in Sweet Spot is we explain how lending decisions are made so that the next time you go for a loan, you can question, well, why did I get that price? And why are you looking at my credit report? And you can be proactive at looking at your own credit report and seeing, what your score's doing, and kind of trying to help people to understand the information that lenders look at that will affect how a person's seen in that application process, and also how they're treated when they have a loan with a financial provider as well, because people don't know around arrears and what to do if you miss a payment, and people go to ground and hide when actually that's the last thing you need to do. If you've missed a payment, don't hide, like phone really fast, because then most lenders will try and do something to help because it's in their interests too, So I think that's something that I would like to call out, is that people talk about financial literacy, but it's actually helping people to understand the process by which loans get approved and the price that you get, the interest rate you get charged, and being able to have a better conversation about that, I think would be really useful for all New Zealanders and business owners, that you work with.
And also, I think your credit score. I was talking to somebody who was a highly accomplished person yesterday. It's a very successful business, owns properties and whatnot, and didn't understand what sorts of things affect your credit score. That was quite surprising for me, because it's my fluency is that stuff, and you kind of take for granted what people know and don't know about that. And even something as simple as your credit score and what is going to affect it positively and negatively.
And knowing that in New Zealand there are 3 different bureaus, and they all have a different score, and that energy companies report to one and bank companies to the other. So it's actually about being curious about your credit scores across all 3 to see what information's in there, and checking, because they've all got their own black box, and but like you said, there are some fundamental things that will affect your score, like your age, how much credit you've got, whether you've missed payments, how long you've had a credit file for, especially for people that have come from overseas, realizing that just because you had an amazing credit score in the UK or something, comes here and you're kind of an embryo, because you're seen as higher risk just because the system doesn't know you yet, when
Yes.
actually you're not higher risk. And I think that's one of the things that we do at Sweet Spot, is that we kind of go, well, the system, the score says you're high risk. Talk to me about actually what happened. Why has your score gone down to 300? Like, what's happened? And people are telling us stories of relationship breakdowns and losing their job over COVID. And it's like, well, actually, you're not high risk. It's that you had a bad thing happen that affected how the system sees you. So actually, we kind of back solve that and go, well, actually, your risk profile isn't as high as the system is saying.
Yeah. So what advice do you have for someone who's considering taking out personal debt?
What advice do I have? I can't give financial advice because I'm not a financial advisor.
What things should we think about when we're considering?
Thank you. Generic information. So if you're thinking about taking out debt, really look at why. Like, what's the purpose for that debt? Is it a short-term sugar rush that you're choosing to take the debt out on? And will the debt of 2 years be like a hangover from the holiday that lasted you 2 weeks? So really think about what you're using it for. Do look at your credit score first, because that will affect who is more likely to say yes or no to you. Interest.co.nz is a website that has a decent comparison of all the interest rates that are available. What else would I say? If you're consolidating debt down into one payment, because lots of providers do that, not just us, I would really encourage people to consider whether it is going to be a reset, or whether it's kind of a bit of a pattern around, well, I'll reset and then I'll add on. So just kind of take a bit of a reflection around kind of how this debt is behaving for you and how you're treating it. Because kind of kicking it down the road can mean that you started off with a 2-year loan. And I've seen many, and I'm sure you have, people that end up with a 10-year loan that started out at 2 years, because keep topping it up and adding a little bit more. And then just because you see the amount going out every week, you don't realize how much it's actually cost you. So thinking about that too. Yeah, and I guess, thinking about the future, and as humans, it's really hard because we are creatures of the here and now, and find it really hard. There's lots of behavioral economics type stuff that demonstrates it's really hard for us to think about the future and the life that we want to live in the future. But what we do with Sweet Spot customers is that we attach the loan to a why. What difference? How will you feel at the end of this financial reset? What's your goal for this financial reset? And people are talking about better housing, having enough money to go and see their family overseas because they haven't seen them because of COVID. So like link it back to your heart, not just I'm going to pay a loan off. Like, money and lending is not rational. It's not transactional. It's emotional. So I think if you're looking at debt, consider the emotion that's behind why you're looking at doing this, like what's really underneath it, and take a little bit of time.
I feel like I'm going to cry. So where to for Money Sweet Spot?
Where to? We went nationwide last Friday, which is quite exciting. So we're now available everywhere in New Zealand. People can have a nosy online, and we also operate through financial mentors and housing providers. And we are building out our rewards program, which is actually our partnership with Nudge Global. So we're the first finance company in the world to link positive financial behavior and investment in yourself with a loan product. And the reason that is that most finance companies don't want to lose their customers, but we do. So building out what that really looks like and creating a real a community of spotties. So spotties are our team and our customers. So really figuring out what that can look like, because we don't know the answers to this. We've just made a little start, and really Money Sweet Spot is more of a movement than it is a business. So kind of really understanding what that can look like for New Zealanders, and doing lots and lots more listening. We've already lent, I think we hit 1.5 million yesterday. Yeah, so we've already got about 65 customers, $1.5 million. We've saved our customers over the life of their loan around $500,000, which is really cool. And we want to lend 5 million in the next few months. But that's more around helping more New Zealanders. So it's not about the 5 million, it's about, well, what difference could that make to Kiwi? And, lots of people that we're helping are paying 44% interest on their loans. And I was shocked that actually even still existed, but it does. So you can imagine if those families are paying 44% interest and they come to us and they get 13, thousands back in their pockets a month. It is life-changing for people.
Yeah.
So the plan from here is really to get the word out there, and we've been quiet for the first 3 months because we wanted to make sure that we did a good job before being out there. So now we're open everywhere, wanting to help as many people as possible get out of high cost debt so they can get on with their lives, and also to kind of nudge the financial system that you can be perfectly sustainable without needing to charge 44%. And if people argue that that's a risk-based price, well, I might swear and say I call something on that because I don't think it's true.
Yeah. I'm just so fascinated. I think what you're doing is beautiful. You're giving people who are feeling really, really vulnerable and stressed, you're giving them dignity and a pathway to a brighter future. And it's absolutely breathtaking. And I'm just a massive fan. I think your mission is just beautiful. And I really thank you so much for taking the time to talk to me today.
You're so welcome.